Welcome back to Be Rich. My good friend Athira is back here to ask me questions. And this time she has really tough ones, which normally a topic which I avoid speaking on tape. Unfortunately, it's not in Tamil, but it's in English. Let's go on. Hi Athira, how are you?
Hello, sir. I'm good. How are you?
Not bad. Could be better.
Okay, how was this week? Was it tough?
Very tough. Very tough. Too much time. I'm going to record everything today so I
Mm-hmm.
can take 2 days off.
Oh, very nice.
Mm.
Okay. So, like you said, I've also brought a tough
Tough.
questions, I
Yeah.
guess. Okay, so what do you think? Can you just tell us what a bond is?
A bond is a promise to take money today and repay at a later date and pay an interest on it.
Okay.
That is, if you have more money and I have no money, I take the money from you since you have no use for it. I use it wherever I want to. And for the pain of sacrificing money, which you are sacrificing for that period of time, I compensate you with an interest for that period. So this normally bonds of 1 year, 3 year, 5 years, it goes on. So a bond is basically a guaranteed payment.
Okay. So, is there any guidelines to check on before buying a bond?
The most important thing you need to know is whether how good the company is, how good the bank is, whether it will pay back or not. Like we knew in Yes Bank, everybody criticizes for Yes Bank that Yes Bank will go kaput before 2 years before it did actually, and 1 year before it went bankrupt. I did talk about it.
Okay.
So it's basically the skill is to pick the bond in which there is very little chance of default.
Okay. So, why does the price of the government securities change? Do you have any idea
Yeah,
about
I
it?
have a good idea why government securities price changes. When the central bank is forced to increase rates, then government securities prices increase. And therefore, when price increases, automatically people rate will increase. So government was borrowing at 6% last year, and by the end of this year, that is March is the financial year. By April, I expect government to borrow at 7%. So the government has to borrow at 1% more. So somebody who bought a bond last year on a 100 rupee bond will get only 99 or 98.50. So because if he wants to sell the bond, I might as well buy a new bond at 7 rupees, 7% interest. So he has to give it at 99 rupees to me. So I'll get the 7% interest. So the most sensitive bond is the government bond because governments are perpetually short of money. So they will always be borrowing. As I'm talking to you, Nirmala Sitaraman is borrowing money. So the prices are very sensitive and it will change.
Okay, fine. So we have clients who says that investing in FD is also like same as the bond.
No, there is a big difference. A fixed deposit is you're loaning money to a bank. It gives you an interest of 5%
Mm.
and there's a TDS of 10%. There are two types of bonds, traded bonds and not traded bonds. Bonds which are traded in the market, there is no TDS. Bonds which are traded in on interest, there is no direct tax deducted at source. If a bond is not tradable, there is a 10% TDS. The second big advantage is in a bank deposit, a certain amount of money has to be used to buy government securities, about 18 to 20%. Therefore, the money you return you get in a fixed deposit from the bank is less, and the money there is a guarantee of repayment. So you get only 4.5% as of today. It may go to 5.5%. But price rise, inflation, since your father runs a restaurant and you know the price of tea has gone up by more than 20% in the last 1 year. If you actually keep money in the bank, you are losing money. There is an illusion of safety that my money is safe, but actually you are losing more money by keeping in a fixed deposit. It is like putting sugar in water.
Mm.
Sugar is still there, but you can't see it. It is dissolved. Same way.
Okay, fine. So we have like three kind of bonds: the government bonds, the corporate, and the bank. So which one would you choose, or which one would you advise?
I will not choose government bonds. I won't buy government bonds because it's negative interest rate. What I will definitely buy is corporate or bank bonds, but depends on the quality of the company. If I had to buy a bank bond or a Tata bond, I'll buy a Tata bond.
Okay.
I won't buy a finance company which I don't trust. So for me, the most important thing is who is the promoter of the company. I think I'm giving it to that person. What is his track record for that repayment? I trust Ratan Tata with my money. I trust Kumar Mangalam Birla with my money. I will not trust an Ambani with my money. Even though Ambani will have a better
Rate of
credit
interest.
rating than me, one brother has already defaulted. So definitely I will not put my money in any Reliance company.
Okay. So do you think investing in corporate bond is worth the risk?
You have no choice but to take the risk because anyway you're losing money by keeping it in fixed deposit. Like your father was selling tea at 10 rupees 2 years back.
Mhm.
Today he'll be selling at 15 rupees,
Yeah.
right? So 10 rupees has become 15 rupees in 2 years. That means 1 year it was 12 and a half. To understand smoothly,
Yeah,
it was
yeah.
12 and a half, 12 and a half. If I had put 100,000 rupees, I could have bought at least 100 cups of tea 2 years back. I lent that money to the bank. The bank will give me 100 rupees and deduct 10% tax. So I'll get 1090 rupees. At 15 rupees, I can't even buy 75 cups of tea. So anyway, I'm going to lose money. So there is only an illusion of safety in a bank. Bank is 100% you're going to lose money. Corporate, only if there's a default you will lose money. And if you pick the right corporate, the chances of default are very little. If somebody tells me Ratan Tata is going to default, I'll laugh at you.
Are government bonds same as the corporate bonds?
Now, government bonds is the difference between a corporate bond and a government bond is corporate bonds needs to have cash flow.
Okay.
That means they should have business properly
Running
run
it.
and from profits they have to repay the bonds. Government doesn't have to care. They'll just print more money and give it to you. And because the government has been printing money for the last 3 years, is why your coffee tea prices your father had to increase from 10 rupees to 15 rupees. That is why I'm saying there's an illusion of safety. You will lose money because you will get 6.5% interest, right? But actually, the price rise in the market is 12 or 13%. So why will I buy that at 13% and this at 6.5? I rather buy a government. If you are so worried about risk, I buy a public sector bank bond, which the government will not default. I can buy at 8% or 7.5%. And if somebody wants these more details on this, they should be writing a mail to berichenglish@gmail.com and my team will respond to them.
Okay. So do you think it's safe to invest in government or corporate?
Government is a sure shot way of losing money. Whatever you have invested, you will get the money. The same tea story.
Uh,
Okay. But corporates will give you more than, at least you will be able
the
to
rate
buy
of
that 100
interest.
cups of tea 2 years down the line. But the point is, if you pick the wrong corporate, you will lose the capital.
Okay, but like, isn't it? They always say that the government bonds are safer, isn't it?
When you don't, if inflation is zero, then government bonds is safer.
Okay.
But inflation being where it is, government bonds is a sure loser.
Thank you so much for discussing about the bonds.
Oh, I am very happy that we discussed bonds today and you didn't ask me some personal questions. I think, no, I have never done a program fully on bonds. This is the first time I have done something on bonds. I hope you guys like it. Thank you for watching, Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share, and subscribe our channel.